Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Thursday, the 7th of May. I'm Daniel Lam, your host for the podcast. We spoke about the dollar yen in last Wednesday's podcast, noting that the BOJ cannot ignore the threats of inflation, and a weak yen can only add pressure to the import of oil. Historically, the BOJ intervened when the dollar yen went above the 160 level, and indeed, this was what we saw over the last few sessions. So the dollar yen drifted above 160 at the end of April, and after the intervention, the dollar yen fell by several big figures. This again signals the authorities enduring discomfort with dollar yen trading above 160, and this is despite BOJ Governor Ueda's non-committal stance on future rate hikes at the late April meeting. Now, the Ministry of Finance would favorably view subsequent price action in dollar yen, which has quietened down, and market participants staying on the sidelines. We see a risk of further follow-through by the authorities if the dollar yen climbs back to 160 in the very near term. So there was precedent for this. On the 1st of May 2024, the Ministry of Finance resumed selling dollar after the previous bout of intervention on the 29th of April failed to keep the yen bears at bay. Now, from the MOF's perspective, thin liquidity during Japan's current Golden Week holidays may bluster the case for intervention. The FOMC meeting has also removed a key upside dollar risk, although the US data schedule may still play a role in the timing of the MOF's next move. Do note that FX intervention in Japan is typically aimed at capping yen weakness rather than engineering yen strength. So the intensity of the recent jawboning and prior episodes of FX intervention suggests that dollar yen at 160 is still a very important line in the sand for the authorities. But for a more convincing yen rally to take root, the BOJ would need to be hiking rates sharply, which is a little bit unclear at the moment. So we believe there is very moderate but not runaway upside for the yen against the dollar, and we continue to see 152 as our 12-month target for dollar yen. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.